Welcome once again to your program, Broad Street Update, in conjunction with SCM Capital. As usual, we have our favorite research expert, the one and only Jide Downsy. Welcome once again.
Yeah, good day.
Yes. Quite an interesting week. Very interesting. Again, you can follow us on all social media angles. And also follow SCM Capital on all its angles. As we dive straight into it. Wonderful week. Wonderful month. At some point, as if the bulls were going to take everything. Can you give us an overview of the week? Also looking into the month, what happened in the market this week?
All right, thank you very much. Let's start with July ending today. It's been an interesting July. July is a month where we had a recovery from the dip that we had in June. Of course, June lost about 13 trillion naira. And as we speak, we've recovered almost 12 trillion naira in July alone. All right.
Wow.
So the equities market seems to be very, very resilient and also very thriving as we speak. A couple of factors have been very responsible, and particularly for this week as well. Though we had a reso between the bull and also the bear, but the bull had always taken the lead over time.
Our favorite bull.
Of course, yes. And a lot of things have been responsible. And I'm going to give us two different situations that have been responsible for what we currently have been witnessing in the equities market. All right. First of all is the dividend dynamics that we currently have been enjoying. Now, when I say dividend dynamics, what I mean is this. For a couple of organizations, particularly the fast-moving consumer goods and the industrial goods sectors, we'll see that in 2023, where we had the macroeconomic shocks in terms of the subsidy removal and the devaluation of the currency, we saw how deep their financials were from the middle table to the bottom line. It was all in red. And so they couldn't pay dividend. In 2024 as well, that was a repeat of the same thing because, so they were all in deep red and investors were losing some certain stem within that particular place. So that gave a lot of shine to the banking stocks where they were the ones enjoying the whole of the subsidy removal or the devaluation of the FX and all other policies that supported the banking stock. So the banks were shining in terms of the dividend kings, and that was why the likes of MTR, GT, and Zenith were able to pay over 10 naira in terms of the dividend time. So right now in 2025, the books of the FMCGs and also the industrials, they were able to recover from the shocks in 2024, all right? And in 2026, they were consolidating on the gains that they made in 2025. So that now has put them in a particular situation where they can now compete and even edge the banking stocks in terms of the dividend. So just yesterday, you can imagine MTN declared an interim dividend of 26 naira.
Wow.
So that is very huge from a EPS of 33 naira. All right. And that 26 naira is far above the entire dividend they paid in 2025 financial year. All right.
Wow.
They paid 20 naira total dividend in 2025. So it tells you that the dynamics is now changing. It's not just MTN alone. We saw the likes of WAPCO as well paying 16 naira EPS. I mean, the dividend, interim dividend, and this is interim dividend, not even the full year dividend. So the banks now, we can now begin to see the shift from the dividend dynamics that everybody is refocusing back into the sectors where they were underperforming in 2024. They couldn't pay dividend. In 2025, they were struggling to pay dividend. And now in 2026, they are not just coming back, introducing themselves. They are reinforcing their stance in the market. So that alone is boosting their confidence or investors' confidence in the market that the market had gone through its worst. And now it's not just it's not just recovering, it's consolidating on that recovery. And there is a massive support for the market as we speak. So that's on that. The second one is that when you look at the macroeconomic situations that they've gone through in this economy, all right, what are the policy shocks that we think we are expecting again that could distort the market performance? We have not really seen that. Earlier this year, we envisaged two particular things that could have created a lot of distortion in this market, and that is the election. Because the pre-election year, right, there's always a jitter amongst investors. That is a pre-election year, anything could happen with the election, unrest, voter apathy, and the likes like that, that would influence the financial market, right? But right now, as we speak, it seems the coast is clear. We've gone past that era of pre-election year where there could be investors jitters, right? And again, one thing is that when you look at the composition of the investors in the market as we speak, over 80% of that is domestic. So there is no threat as to, because the election year is coming, foreign investors will begin to pull their money away from that because of government policy and the rest. So investors have seen an opportunities in the economy, and they know that irrespective of whoever is going to be winning the next election, we already have had them before now in 2023 when they campaigned, and there is nothing new again that anybody would want to introduce in terms of macroeconomic fundamentals or shocks, right? So that had given the market some level of backings, right? Aside from that as well, so many other infrastructure policies, right? Market developments that have supported the market as we speak. Okay. Now, again, the second threat we identified before now was the insecurity situation. All right. While we still see the insecurity situation happening we've seen various governments, from federal governments to local governors as the states and the rest like that, improving on securities by the day. All right. One of the state's governor just bought 2 surveillance aircraft. All right. That tells you that everybody is seriously interested in security situation in the economy. The state's police law is going to be passed as well. That will also strengthen the security fights in Nigeria. So if investors are now seeing that the coast is getting clearer by the day, and we can see beyond what was clouding our judgment before now, then there is no need to panic as to what exactly the economy will be doing in the next couple of months, years, and the rest like that. So that is why investors are now buying into the future of the economy, looking at it that the economy is on the right path, and the financials are saying it as well as we speak. So that is what had happened that influenced the level of resilience and rally, right, that we are witnessing in the equities markets.
Fantastic. You know, interesting times, like you rightly said. The dividends are back and are bigger.
Yeah, of course.
They're bigger than ever. So I want to know, other than the FMCGs, which other sector do you have an eye for right now, or you think people should also look at? Because look, don't ignore this other sector.
All right.
You know, or can you give a sectoral analysis of?
Okay. Yes. The FMCG, the telecommunication sector, is also very significant. All right. You see the level of data migration, adoption, and the rest like that. Okay. AI is taking a whole lot in terms of data consumption. The Instagram of this world, the social medias of this world is taking a whole lot of data consumptions as well. So all that is feeding back into the likes of the MTN, the health situations that we had. I mean, companies that are listed. So that alone is a concentration for the investors to look at. All right. Then the industrial goods as well. All right. Particularly the cement industry. Because of the level of infrastructure, we've talked about this over time. When you look at the level of infrastructural developments that this administration, from the federal government to the state government as well, are embarking on ahead of 2027, right? Everybody needs to showcase what he has done and this and that. Right? So you will see the price growth and also the volume sale growth in the industrial, particularly the cement, right? So that alone is a concentration. So by the time you look at it with their results now, it's now telling you that their trading multiple is lower and giving opportunities for you to come in and buy more into. So that is a sector that you can also concentrate on without leaving out the banking sector as well. All right. They've just completed their recapitalization. All right. And they have before now been known for dividend kings. And I'm not sure they want to be left behind in this dividend season. If those guys are just coming to make 1 trillion, most of the banks have already made 1 trillion PAT. All right. Take, for example, MTN PBT was just 1 1.07 trillion naira. All right. And this is what GT Bank had done in 2025. This is what Zenith Bank had done in 2025. So in 2026, the likes of GT, Zenith Bank, and some other banks can make more than 1 trillion naira in terms of profit after tax and the distributions to investors. So the banks shouldn't be left out as well. And when you look at their trading multiples too, and the potentials for growth too, so you'll be able to have the confidence that those sectors are going to do well as well. Okay, so investors are advised to continue to take positions in the equities market, looking at their risk and looking at their own horizon as well. And that's notwithstanding, if they are very skeptical as to where to dive in, how to dive in, that's why we come in, give them advice as regards what to buy, when to buy, and what not to buy. All right. And if you are risk averse, you are risk cautious as well, there are money market instruments, there are instruments you can buy that saves you from the risk of volatility in the equities market. And that's why we have the money market that gives you a compounded yield. All right, over time, amortized and compounded. So you can always approach professionals to discuss all of these things with us, because market dynamics are not left to the hands of quacks or what you just see on social media. Everybody just advise you, we say this. No, they are left in the hands of professionals who understands the time and the season, where when you have to buy, when you don't have to buy, so that you don't get caught up in the trap. All right.
Oh, thank you. Like the children of Issachar. I got that one day. So, fantastic. It's good you brought in the money market. There are people there because we got some feedback like, why don't you guys talk about money market? Why don't you tell us the potential, the upsides, and the results, or some other kind of funds? Okay. What other kind of funds can people look at other than the equities market that they can put their money in?
Okay. Yes. For money market is basically instruments that are short dated and have a particular fixed yields around them. Okay, like the treasury bills, the commercial papers, all right, and the bank placements. Okay, all of them are great into money market. There are other equity based money market. Equity based mutual funds. Okay, where you also have a proportion of the funds that have been in equity and a proportion of that in fixed income. We have all fixed income based and the rest. All of those things are what the mutual fund tells you or tries to make you understand is that if you are very skeptical as to the kind of instruments you want to deal in, all right, maybe you don't have the capacity. Take, for example, for a minimum subscription on treasury bill is high for a low income earner, all right? So you can buy into mutual fund, meaning so many people contributing into one pot to be able to buy that, all right? And again, if it is equity mutual funds, you know that, I don't know whether to select bank A or this stock B or stock C, so that and to reduce my exposure to volatility in that stock, you can buy mutual funds, and because my professionals are managing that, they'll be able to guide you into, okay, fine, we can assure you of this yield, we can assure you of that yield. For example, our SCM Capital Frontier Fund, all right, is equity based, all right, is equity mutual fund, and currently our yield is on 95% today. So that tells you that we are monitoring the market at every point in time, and we have a portfolio of stocks that are put in that particular basket. So anytime we see that the market is not going to be doing very interesting, we'll pull out the money, and when we'll see an upside in the market again, we'll bring in the money, assuring you of security and safety of your funds and return of your own funds without you putting yourself into the pressure of losing out when you begin to monitor the market. So that's why you have the mutual funds that safeguards you from any volatility that is happening in the equities market. All right.
Yeah, thank you very much. So I want to ask on a final note before we leave, what do you think, your outlook? Look at August is just knocking the door, and we're going to enter into August. What's your outlook for August?
All right. It's still a very bright outlook for the financial market over time in this particular August. Going into August, this is the dividend season. This is the results season where virtually all of them will be releasing their results on the floor of the exchange by today and next week and the rest like that. And for the few that have released so far, they are telling us that the direction is still up, right? Because of what they have been able to declare in their financial statement. And this is what we looked at. We'll look at their fundamentals. We'll be able to do some valuation metrics and put to in terms of what exactly is still in there for this particular stock. For the fixed income as well, the yields is still relatively very attractive and interesting. The pressure on inflation has moderated significantly. Aside from what we are still having in the energy stocks, the energy situation in the Middle East, which they are still profiling situations to, all right? Flood has not created too much stress to food inflation as we speak. So, and because we are entering the harvest season, so yield will relatively remain the same way it is as we speak. For the FX, because of the various policies of the central bank as well on our FX, all right? So the FX exchange rate will remain around 1,000 naira, 1,300 or 1,400 naira, right? That again has improved the outlook of the financial market as we see. So going into August, while we'll still have a bit of profit taking, all right, because of the dividends, most of them will be marking down on August and also be paying that dividend in August. So you will see a bit of that volatility. You'll see a bit of profit taking as well. Maybe some people want to pull out their money to pay for new session, education, and the rest like that. You will see that a bit of volatility there. But those volatilities are not caused by macroeconomics. They are not caused by poor performances of those stocks. They are just poor. They are just normal market trends that will happen. And that is when investors begin to look at where those volatilities will be so that they can cash in, all right, on those volatilities. So August is going to also be very interesting, all right, barring all other situations that could impact the entire economy or the global economy. But as we speak, all other things being equal and stays the same way it is till this moment, it's going to be a jolly ride in August as well.
Jolly ride it is. Thank you very, very much. Once again, you're always the man to go to. Yeah, you've heard it here. August will be beautiful. August will be sensational. Look, do not just keep your money, make your money work, because money is supposed to work. Again, we'll come your way next time. I remain yours, Dr. Temitope Akinwuleola, signing out for Broad Street Updates in partnership with SEM Capital. Thank you.
Thank you. All right. Cheers.